All right, the year is wrapping up, and if you're a business owner, you know what that means. Tax season is right around the corner. Today, we're going to break down a really powerful and totally legal tax-saving strategy that could make a huge difference for you. Let's get into it.
I mean, that's the big question, right? For any business, big or small, the goal is the same. How can you legally and strategically lower that tax bill? Well, you're in the right place, because that is exactly what we're talking about today.
You know, for entrepreneurs, the end of the year isn't just about holidays. It's this frantic sprint to the finish line, closing the books, seeing how you did, and of course, trying to manage that tax liability. It's a challenge every single business owner faces.
Look, at the end of the day, it's pretty simple. You work incredibly hard to make money, and you want to keep as much of it as possible to pour back into your business, your team, and your future. Smart tax planning isn't about dodging taxes. It's about managing them so you can keep growing.
So you've got this challenge, but where's the opportunity? Well, believe it or not, it might be hiding in plain sight. We're talking about your necessary business purchases.
And this is the core idea right here. Instead of looking at that new laptop or new truck as just another expense, you need to start seeing it as a strategic tool to lower your taxes. It's about making your money do two jobs at once.
And we're not talking about some weird, obscure stuff here. This applies to the things you probably already need to run your business. You a contractor who needs a new truck? That counts. A creator who needs a new camera? Yep. An office that needs new software or a few new laptops? All of it could potentially qualify.
Okay, now this is the part that's a real game changer. Listen to this, financing. You don't always need to have a huge pile of cash on hand to get the full tax benefit this year. You could finance a major piece of equipment and still potentially deduct the entire cost against this year's income. That's huge.
All right, so how on earth does this work? It's not some secret loophole, it's written right there in the US tax code. So let's pull back the curtain and look at the actual rules that make this whole thing possible.
The two main players you're going to hear about are Section 179 and bonus depreciation. Yeah, they sound super technical and boring, but just think of them as two different tools in your toolbox that basically do a very similar job. They're designed to help businesses invest in themselves.
So first up, you've got Section 179. The easiest way to think about this is as expensing. Instead of the old way where you'd write off a little bit of an asset's cost each year, Section 179 lets you take the whole deduction, the full purchase price, all at once, in the same year you buy it and start using it.
Bonus depreciation is, you guessed it, very similar. It also lets you accelerate that write-off for a massive deduction right away. So instead of spreading it out over many, many years, you get to take a huge chunk of it immediately.
So here's the bottom line. Don't get too hung up on the names. Whether your accountant uses Section 179 or bonus depreciation, their goal is exactly the same: to lower your taxable income for the year, which means you owe less in taxes. Simple as that.
We've covered the what and the how, but honestly, the when might be the most important part of this whole strategy. Because when it comes to these deductions, the clock is absolutely ticking.
All of these potential savings, this entire strategic advantage, it all comes down to one single critical date on the calendar. If you miss it, the opportunity is just gone, at least for this tax year.
There it is. That's the magic date. But here's the critical part. The equipment has to be purchased and placed in service, which means it's delivered, set up, and ready for use in your business by midnight on December 31st. Just buying it on the 31st isn't enough. It has to be operational.
Okay, so buying that new piece of equipment is a brilliant move, no question. But let's just zoom out for a second, because the smartest business owners know that one great play doesn't make a complete game plan.
Think of this equipment deduction as a really powerful move in your financial playbook. But it can't be your only move. Real financial control comes from looking at the whole field and planning all your moves together, all year long.
And this is what that bigger picture looks like. A real strategy connects all the dots. It's using equipment deductions to lower your taxes now, while also maxing out retirement accounts to save for the future. It's about being smart with your payroll, managing any investment or crypto gains, and even using charitable giving strategically. All these pieces work together to build a much stronger financial foundation. So we'll leave you with this to think about. Just look around your business right now. What's that one piece of equipment, that one tool, that software you've been meaning to buy? Because making that necessary purchase before the deadline might just be the single smartest financial move you make all year.